Ed, good morning. Welcome back. I got two quick questions to kick us off here. Number one, it looks like you didn't have any tech issues today, so welcome. That's a welcome surprise.
That is.
And number two, how'd your bracket end up doing? We talked last time right as March Madness was starting. What ended up happening to you?
You know what? Houston made it to the final game. I fell a little short. Hopefully I'll deliver a little better today than the last time we spoke. But I will say this. It's a shortened week. I still needed my sun kiss to get the day going. So, it's a Thursday, but you got to fuel up in the morning. So sun kissed or Mountain Dew for me. That's my preferable choice. So
there you go. I'm a coffee guy myself, but we're going to call you the postman here. You are going to deliver, and you delivered last time as well. So, okay.
My Stockton. Let's do it.
And here's the other thing. So regarding the bracket, I had Duke, and I was at the top of my pool, and I'm over here thinking, oh, what am I going to buy with these winnings? And then all of a sudden, I didn't have any winnings. So I understand exactly how that goes. Okay.
Yeah.
Okay. So the first thing that I want to ask you here, yesterday, we actually had a story that showed that there was massive amount of interest in dip buying via the TQQQ. So the first thing that I want to ask you is, where are you seeing the most dramatic inflows and outflows?
Well, TQQQ is not a Direxion product, but
right.
A great trading vehicle. In the case of Direxion, we've seen buying on the dip throughout the month. Of course, it's been really a tale of two halves in April. The first week of April, you saw massive selling. The last 2 weeks, it's probably cut about half those losses in the major indices. So we've seen significant buying, a lot in our bull funds, in particular, the triple leverage semiconductor bull. That's our biggest fund, SOXL, for example, TechL, which is also the triple leverage on the S&P Select Sector Tech Index. And also the single stock. As you know, we got a number of leverage and inverse single stock ETFs, particularly on the bull side. We've seen significant buying in TSLL, which is the 2X bull.
Yep.
That has dipped continuously throughout the year. You've seen little spurts of a rally with Tesla. And then just last night, for example, Taiwan Semiconductor, we have that as a 2X bull and inverse bear. We're seeing a lot of activity in that post earnings today. It looks like the semis might stabilize a little bit today as a result of Taiwan semis outlook. They didn't reduce any of their guidance. So at least for today, it looks like the semi space may get a little bit of a relief after yesterday's pullback.
Okay. All right. And TSMX, that's going to be the levered bull ETF, the Direxion product. What were the other ones for TSM?
TSMZ, which is the inverse 1X. So all of our leverage and inverse single stock are either 2X bull if you want to take the side of a short-term trade to the upside, or if you want to hedge gains or take an outright short position. We have a non-leverage inverse 1X on all the individual pairs of stocks that we have. So, for example, if TSM is up 3% today and you're in an inverse 1X fund, you'd be down 3% today.
And so that's actually perfect for my next question here. So are you seeing more flows recently into your inverse ETFs?
Yes. We continue to see buying on the bull side. But on the dip, but even during the recent rally, we still see buying. But there are some areas that have actually rallied this year, particularly China and gold miners. I know we'll talk about that more a little later. So we're seeing some inverse buying on the triple leverage bear on what's equivalent to FXI, which is the FTSE China 50. So we have a 3X bear, that's Yang. And then the gold miners, what a tremendous rip. Gold's done a great job this year for a diversification standpoint, but look at gold miners, higher beta associated with them. Those are gold mining stocks, the likes of Barrick, Newmont Mining. They've roughly doubled what the physical commodity has done this year. So on those rallies, we've been seeing buying on the bear funds, particularly Dust and J-Dust, which is the 2X bear, on gold miners and junior gold miners. Some of you might be familiar out there with GDX and GDXJ. We basically have the 2X bull and bear versions using those ETFs and tracking those underlying indices.
Okay, so I'm just going to get right to it here as far as gold, because you're right, this has been an impressive move here. Do you think the rally in gold and the gold miners has more legs to it? Or is it time maybe to utilize some of these bear ETFs?
Yeah, no, without a doubt. I mean, we're seeing more inflows in the gold mining bear funds right now and outflows in the bull funds. And you would expect that because they've had such a tremendous rally. And these are short-term trading tools. So you have some profits, you want to take them. Some people want to take that contrarian play and believe that gold miners is overextended right now. But when you look at gold itself, and I'm a commodity and alternative investment guy, so I love talking about this. Gold itself, the physical commodity, just hit another high yesterday. With all this geopolitical risk, you feel that gold will still have a bid to it. It's right now the preferred flight to safety. Keep in mind, interest rates for the most part have been rising. And with the dollar right now at 20-plus month lows, that is a good tailwind for metals, especially precious metals. Historically, there's been an inverse relationship between the dollar and precious metals. Gold has rallied despite the fact that the dollar was strong until recently, and you continue to have central bank buying right now. So that's another area. But there is a difference between gold miners and gold mining stocks and gold itself. And people have to be aware of that when trading. There's divergences there. So we have access to gold mining stocks and junior gold mining stocks. And that is through the indices, bull and bear 2X, as I mentioned. But you have to be aware that gold mining stocks can behave differently than the physical commodity itself. And by the way, GDX, for those that believe in trend is your friend, which is our vehicles are based on, you want to ride that trend. GDX has been up 7 straight days. So anybody in a 2X bull right now, whether it's Nugget or JNUG, has done very well.
Indeed, man, that goes back. I've traded JNUG plenty of times in the past, trying to hit gold, trying to get some more leverage on that. It's great to see these coming back. So real quickly, we kind of talked about this, but just as kind of more of like a blanket response here. We've seen a lot of volatility recently, and I know, at least in our group here, especially for me, the leveraged ETFs have really been the trade of choice. I feel like I'm able to make more sense out of them, do better with those trades. How are traders navigating through this volatile market? And do you see this continuing, or maybe a proliferation of using some of these ETFs instead of traditional equities?
Well, I think for the traditional equity side, of course, they're going to have a place for individuals that are more buy and hold type of investors that don't want to stare at their screen every day. I mean, this is a headline-driven market right now, especially with the tariffs. Look at the intraday swings we've been seeing. They've been historic. Last week, we had record inflows. The market itself for ETFs had record type of flows. So you really need to be at your screen if you're trading leverage and inverse ETFs, or for that matter, anything that's a high risk reward type of trade. And in this environment, you just have to be very vigilant. But for anybody using leverage and inverse ETFs, these are short-term trading vehicles. Every day's a new day. They'll track for any given one day, but after that, it's path dependent. What does that mean? If something's stair-stepping in your direction, leverage could work for you. But however, if something's very choppy or it's working against you, obviously your losses are going to be significant. So these are really for the active trader, not for an individual that wants to have asset allocation, part of a portfolio, and is thinking long term. These are not appropriate for those individuals.
Yeah, that's perfect. And I'm glad that you're saying that, because we try to mention that all the time as well. These are short-term tactical trades. They give you some really good exposure. The leverage is great there. Okay, that's great. One more thing that's kind of happened here recently is we've started to see some of the bank earnings. So my question here is, how are some traders positioning themselves after some of these mega bank earnings? Are they using these ETFs? And if so, which ones?
Well, it's interesting. You had good bank earning results for the most part this week. And most of the broader banks, the rally was led by the equity trading revenue. But you hear the CEOs of some of these banks, and they're conveying the economic outlook continues to be uncertain. They're concerned about loan issuance, credit markets, investment banking showing signs of weakening. So we're seeing bull and bear plays on the triple leverage FAS, FAZ. FAS is the bull, FAZ is the bear. On the financial select sector index, we're also seeing some flows into the regional banks, triple leverage bull, DPST. And if you look this year, for example, when you look at the mega cap banks versus the regional banks, what a divergence this year in terms of performance. The XLF, some of you might be familiar with, the financials that tracks the financial select sector index is barely down for the year. Yet the regional banks, S&P regional bank index is down about 15% for the year. So, when you're trading, there is a difference between the regional banks and the big banks, the mega cap banks. So that's something to keep in mind. We're also seeing some single stock trading with our leverage and inverse ETFs. We have Berkshire, 2x bull on Berkshire and 2x bear, and 1x rather bear.
What's the ticker on those?
BRKU for the 2x bull, and the inverse bear is BRKD. Keep in mind also that Berkshire is the largest holding within the financial select sector index. So a lot of people don't know that. It's also with some of the big banks that make up the top 10, the JP Morgans, the Goldman Sachs, et cetera. And it also includes some credit card companies, most notably MasterCard and Visa. So you need to look under the hood. But the financial select sector index, the top holdings, Berkshire Hathaway, you can trade it through the basket, triple leverage bull or bear, the financials, or a la carte, as I like to say. If you want the single stock of Berkshire, we have that available for you.
Okay, that's amazing. Really quickly here, just as kind of an anecdotal thing from one of our evening shows when we recap what happens on the market. This Monday, April 7th, where we saw this huge spike up here in FAS, I had a number of traders jump on our happy hour show saying that they made 10 plus points on this trade real fast. This was the trade of the day. So to your point there are people in our ecosystem absolutely using some of these. FAS was an absolute monster recently. Okay, real good stuff there. You talked a little bit about TSM. We got the big earning. I call these Thursdays where we don't have a market day on Friday, I call them a synthetic Friday. So it's not actually a Friday, but we've got Netflix reporting after the bell here today. How are you seeing anything in particular with the Netflix ETFs that you have?
Not really. We're seeing some buying on the bull side going into earnings tonight. And we usually see activity both in the bull and bear going into earnings, pre and post earnings. And as you know, we tend to see also an increase in volume around earnings with all our single stocks, pre and post earnings. So it'll be interesting to see what happens tonight. Of course, everybody will be looking at their growth and their subscriber growth, their ad revenue, and to see if they could keep the momentum going for that stock. But there's no direction really, no pun intended, in terms of going into the earnings of how people are trading these right now. There's no real direct flows one way or the other that I can tell you where people are trading.
Okay. Now for Netflix, I've got NFXL. This is the bull 2x levered. And then I have NFXS. That's the bear 1x shares. What am I missing here?
Oh, with the Netflix, one thing to keep in mind is that, again, it's a 2x bull and non-leveraged inverse bear. So there's really nothing to discuss there, except for the fact that you should be aware of the fact that these are short-term trading vehicles on those individual stocks. The one thing I will say also with our products in the single stock lineup, NVIDIA, NVDU, and NVDD have been getting some interest, especially with what happened with the announcement of possibly exports being limited to China in particular, and how that impacted potentially NVIDIA's earnings, which they announced, and AMD as well. So we have those two single stocks that people could trade also within the semi space. And they've made the news certainly recently in terms of how it might impact their revenues.
Okay, awesome. I got one more that I want to ask you about here, just to see if you've seen any flows one way or another here. How about MicroStrategy? Or I beg your pardon, I think I already screwed it up here. It's called Strategy now. I'm so used to calling it MicroStrategy. It's called strategy now. MSTU, right? No, what's the, help me out here again. I can never remember all of these. What do you got?
Just to quantify, we don't have MicroStrategy.
Okay, sorry.
Okay, so but you know what? It's something that if somebody wants to trade a derivative of crypto, that might be something to consider. But I will say, when you look at the basket of stocks, the individual stocks that we're trading, one of the things that's the most important thing for us is the depth of the market, liquidity. Mm-hmm. Can we get that leverage exposure? And in some cases, we may decide not to do an individual stock because we feel that we may not be able to track that on a day-to-day basis, or are concerned about some of the underlines with that stock. So in the case of MicroStrategy, we decided to pass on that, to do that.
That makes sense here. But you do have the leveraged ETFs for crypto for Lambo and Rex. I still think these are two of my favorite tickers in the entire market, by the way. Yeah. So
basket of stocks that make up that index. So that's something to consider the trade. And of course, Lambo, if the Lamborghini, and then if you feel like you want to get wrecked, or you feel the crypto space might get wrecked, we have some baskets of stocks for you to trade. I just wanted to make sure you had the Netflix symbols right. NFXL on the bull side, 2x bull, and NFXS on the inverse 1x bear side. I just wanted to make sure.
Got those. Those I was able to find, and I got those correct. Okay, real good stuff. Ed, is there anything else that you want to cover here? Anything about Direxion that you want to share with the group? Have you seen anything else that's worth mentioning or unusual?
Well, keep an eye on some of the leverage and inverse single stocks. We just launched Palo Alto and Eli Lilly, and we're probably going to be launching more single stock pairs in the near future, so stay tuned for that.
What's the Palo Alto ticker?
The Palo Alto ticker, I'll tell you right now. You might have stumped me on that one. Hold on.
The only reason I asked
on Palo Alto, it's PALU, PALD.
Okay, this is great because for me, first of all, I love Palo Alto. I have called early on this year. I think cybersecurity is going to be a theme of 2025. So I actually was unaware of these. This is great news for me here that you have some ETFs for Palo Alto here. Okay, really good stuff. Anything else, Ed, that you want to cover?
No, everybody have a good weekend, and hopefully it'll be a fruitful day of trading for everybody today. And, be vigilant. And, when you're trading our vehicles again, short term and just, intraday and daily. I can't repeat that enough, and look forward to hopefully being on again.
Yeah, you will definitely be on again. And I'll tell you what, Ed, I'll make you a promise. We will keep saying that too, even in your absence here. Short term. Don't get hit, but use these to your advantage. Really awesome stuff, Ed. Can't wait to have you back. We'll talk about some of the flows. Do me a favor. Enjoy your holiday weekend with your friends and your family.
You too. Happy and healthy. And NBA playoffs, we'll talk the next time I'm on.
Okay. So who's your team? Real quickly before I let you go, who's your team this year?
I'm a Celtic fan, and I have to, even though I'm from New York, love the Celts to repeat. We'll see.
Okay, we'll see what happens. I'll tell you what, Celtics look like absolute monsters in the East there. So really good stuff. Ed Egilinsky from Direxion, the head of sales and distribution for alternatives, Direxion ETFs. Ed, thank you. Have a great weekend. We'll talk to you pretty soon.
You too, buddy. Take care.
All right.